May I remind you that trading is risky and not suitable for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to QuantBox Daily, Tuesday, the 4th of October, an hour before London Open. Here we are. So yesterday we went through QuantBox and I showed you the perspective of using QuantBox to formulate your fundamental analysis, bias, and then go to the charts and confirm that technically, right? So we had a look at euro dollar, and our view here was that we have a strong sell, okay? And just like marveling over the beauty of this data and the summary that you're given, how everything is scored and placed neatly for you on this beautiful dashboard, which includes some targets, a view on the daily time frame, and this beautiful breakdown, which gives you a total score made up of COT data, retail sentiment, seasonality, trend reading, GDP growth, inflation, unemployment, interest rates. Beautiful, absolutely stunning. So yesterday's approach was take a look at QuantBox. You have a view of your fundamental bias. We looked at the dollar pairs yesterday, and then jumping onto your chart and saying, okay, well, fundamentally, I'm a bear. Have I got resistance? Okay. And then, viewing a monthly central pivot point, daily 21, roll reversals, and then confirming that trade on lower time frames. And as you can see, as I mentioned yesterday, you're looking for that lower low, lower high to confirm the end of bullishness, and we haven't had it yet. So you wouldn't be selling this as of yet, okay? But what's interesting is that sometimes you find yourself in a situation where you look at the charts and you stand your ground in the view that something is bearish. You say, no, this is still bearish. And, technically you can see on this daily time frame, nothing says bullish. There's no higher lows. We've got no break of resistance. The resistance hasn't become a support. We've got no reversal patterns. Nothing says bullish, long term anyway. So price is bullish, but our market is still bearish, right? But the problem is that when you haven't got a bias, and I mean, you can flip a coin, but we're talking about a confident bias, a bias that's based on actual information that you can measure, that you can observe, that you can track, that you can prove, right? When you've got that kind of bias, it makes a big difference in the market, because in a situation like this, a lot of traders start to doubt themselves and say, oh, okay, so this is going up. What if this is actually bullish? What if I should be buying? What if I should be getting into this long? Oh, I should have bought down here. Oh man, I've missed out on all these pips. And the problem is that we start to get sucked into our emotions, the FOMO, right? A lot of traders suffer from this. And we suddenly start convincing ourselves at this point in time, it's crazy how many traders would choose to buy euro dollar over here because they've seen green candle after green candle and they think to themselves, okay, this is going up. I'm going to buy over here. Now, the beauty of having a fundamental tool is that you can look at the chart and say, right now, with current prices currently going up, but has anything actually changed? And you can look at this euro dollar and you can say, no, nothing's changed. Everything is still strong sell. Everything's still bearish, right? You can then look at your upcoming news and say, okay, well, I got some news events today, which are important, specifically unemployment change. In Spain, you can see high impact. So I've got a bit of news today. Will that affect anything? Okay. So got to be aware of that. But ultimately, outside of that, has anything really changed? COT data wouldn't have changed because you get that once a week. Fundamentals haven't significantly changed. Seasonality hasn't changed. And my rating hasn't changed. This is still a -6. And it's that control. I look at QuantBox as a tool for control, because what it does is it helps me control my emotions. It helps me control my thinking, where I'm able to have a tool that I can hold accountable for a fundamental bias. It doesn't do the trading for me. I've still got to go and verify stuff and confirm things technically, which means you've got to be a good technical analyst as well. But what's nice about this tool is that it takes the load off in terms of having to calculate all these things yourself. So you can really focus on being a good technical analyst, knowing that QuantBox has your back and can do the heavy lifting for you so far as fundamental and analysis and fundamental bias is concerned. And why I like that is that looking at this chart, I'm not thrown by these green candles. I'm looking at the chart and saying, okay, so my fundamental bias is still bearish. Nothing has changed. Everything is still what it was. This is still a strong sell. Okay, cool. So therefore, I can continue looking for resistance. And if I don't have any, because you can see right now, price is bullish. Price is bullish. If I don't have any confirmation of bearishness on a lower time frame charts, when price is at resistance, you can see yesterday price coming up, closing at the central pivot points on the daily time frame. And yesterday we mentioned, like, you know, so far as resistance is concerned, what have you got? You got a central pivot point, you got a 21 EMA, you got some roll reversals, you got an M3, you got a 55. So a whole bunch of stuff going on in the daily time frame. And so waiting for that resistance is a lot easier when you know the fundamentals are still bearish, that nothing has changed. You don't end up drinking the Kool-Aid. You look at this, and you see here, 51% of retail traders are long. Well, I hope that they realize that there's a difference between buying price when it's bullish and buying the market when it's bullish, right? And if you look at this chart right now, we can both agree, we can all agree that we don't have a higher high, higher low. Now, I'm not saying that this doesn't turn around and go up and that this isn't the end of the euro dollar bearishness, but again, fundamentally, I don't have any change. That gives me confidence. So I can continue paying attention to this chart and waiting for resistance. Okay. And how would I do that? Well, that's technical stuff. So, you know, you identify your resistance, you confirm it lower time frame, whether that's using bias candles in H4 and a market open bias candle H1, or if you're using 5-minute and 15-minute charts, however you do it, looking for that lower low, lower high confirmation that now we've changed from bullish to bearish. Okay. But doing that with confidence because you know that nothing has changed fundamentally. And without this tool, what you end up doing is you end up having a conversation with yourself where it's easy to convince ourselves, oh man, I should have bought this. And we start painting pictures in our mind about how now suddenly everything starts confirming our newly formulated view that this is actually bullish and I should actually be buying this. And oh my gosh, I can't believe I missed out on the buy and I should definitely be long this. And we end up convincing ourselves that we have to get long and so we end up buying it over here. And how often does that happen when you see traders buying at resistance? Whereas if you had a bias that was based on fundamental data, you'd look at this and say, I'm waiting for price to get to resistance. The same thing applies on the pound dollar. So jumping into the pound dollar, you can see yesterday we spoke about the pound dollar and we said, right, waiting for that resistance. And you can see, didn't close at resistance, came up, broke 21 yesterday. Okay. But you can see on lower time frames, we got no call for bearishness. There's no break of support and support becoming resistance. There's no lower low, lower high. So you just continue waiting, continue waiting. How high will it have to go? Well, the fact is this still bearish? Yes, it is. You can see nothing's changed. Okay, there's some dates coming out today. Cool. So you can pay attention to that. Look at your QuantBox tool. Has anything changed? And that gives you the confidence of knowing that when you look at this chart, you've got lots of green candles and lots of people in this situation going, oh man, this is just going to go up forever now. This is it. This is the end of it, right? And very well could be price can come down, make a higher low, and we could do a whole bunch of other things. Price could come up and we could consolidate higher up and then only go down later on. Fine. But at this present moment in time, nothing on this chart says long-term bullish. Fair enough. We're coming up from out of bounds, very far out of bounds, below profit-taking zone. Nice counter-trend trade down here, short-term long, but still long-term short. Okay, and that's quite nice, is having that bias that you can rest upon to say, I don't see any reason for this to be long-term bullish just yet. Now, which comes first? Does the technical come first and then the fundamentals follows, or do fundamentals change first and then the technicals follow? That's something you're going to have to study and observe. Okay. As mentioned yesterday, we are releasing some further improvements and some further versions of QuantBox, which will give you the ability to look at past data, when that data changed, at key turning points in the markets, be able to view the fundamental bias for pairs at that time and see what led. Did the fundamentals change before the technicals, or did the technicals change before the fundamentals? And how often, right? Giving you even more information and more data to make informed decisions. So I continue looking at pound dollar and I continue saying, I see no reason for this to be long-term bullish. I continue being a bear. My fundamentals say bearish. My technicals don't, so I'm waiting for technicals to confirm my fundamental bias. Aussie USD, we looked at this yesterday. We still said, you know, you could be short-term long, but remain long-term short, right? And we can see here, but this is a stock standard profit-taking trade with a central as a target. I don't see any reason for bullishness here. No long-term bullishness anyway. I don't see any higher highs or higher lows. I don't see any higher highs or higher lows. I see consolidation. Okay. But I also don't see price at resistance because you use top of the range. Why would I want to trade the range? Looking for price to close at some kind of resistance. Central pivot point, 21 EMA, M3, roll reversals, whatever else. And then confirm that lower low, lower high, and a lower time frame, right? But in the meantime, at least I'm aware of the fact that if I was doing a counter trend trade and I was buying this just for some profit taking going into the month, notice how price doesn't come off the M2 either, just came off just above that, then my reason is fundamentally still bearish. Kiwi dollar, fundamentally still bearish. So from this perspective, yesterday we looked at QuantBox, we got our fundamental bias, we went to the charts, we then confirmed it technically. Sometimes though, you might be in a situation, looking at yen pairs today, where you're looking at the yen and you're saying, okay, that is sideways. There is no bias right now, it's neutral. Okay. So technically you're like, all right, well, so far as price is concerned, we're significantly high. We've been high for quite some time. Okay. And, you know, what would your long-term bias be? Well, you might decide that you're using position as an indication of what you want to do with this. So you might be looking at yearly pivot points and saying, well, you know, from a yearly pivot point perspective, we're super high. And I'm really looking to get, let's just have a look and see if we can bring that in here. So let's just see if I can bring some yearly in here. Let's see, I'll take monthly off. Let's put yearly on. You can say, well, we really are high, right? That's very, very high. Not really keen on buying this. Okay. Am I instead going to sell it? Have I got the bearishness to confirm that? Have I got the lower low, lower high? Have I got the indication that we're no longer going to trend? And so you might look at this and say, okay, well, from a positional perspective, very, very high. I'd like to sell high. So far as price is concerned, I don't have long-term bearishness yet. Price is still bouncing around, still sideways. I think I need some extra help. Let me go have a look and see what QuantBox says about the Aussie yen right now, right? So this is a different approach. So from this perspective, I'm looking at the technicals first. I'm not clear on what's going on. And I can then look at Aussie yen and say, well, what's happening fundamentally? And I'm like, oh, it's neutral. Okay, cool. Now, this is a big opportunity because for me personally, I think where the major opportunities come from is the change from bullish to bearish or neutral to bullish or bearish, right? Because that's what you really want to be able to trade. You want to be able to trade that change. So if we are currently sideways, and if we are ranging, anybody who knows how to trade a trend will tell you that ranges are wonderful things. Okay, last year, the dollar pairs ranged for 6 months, from January right through to June. On the day of the Fed meeting, suddenly lower low, lower high. And if you got in there, you've been riding those dollar pairs down ever since and having a great time, making lots and lots of pips. A range is a beautiful thing because ranges turn into trends. This won't range forever. This won't go sideways forever. But what changes first? Are we going to observe a change in technical data? Are we going to get the lower low, lower high? And will the fundamentals then follow that? Or will the change take place over here? And then we'll see the change over here. So right now we can agree that both fundamentals and technicals are neutral. Okay. So you'll be keeping an eye on both. And that's very, very helpful because I think sometimes technicals are perfectly clear. Like if you've been selling dollar pairs since last year, June, you've known that they're bearish. You're selling lower lows, you're selling lower highs, and maybe you're just paying attention to your technicals for the majority of the time. But when price turned around last year, it was 6 months of waiting for price to turn around. 6 months of looking at a range. Six months of this, right? There's December 2020. There's June 2021. Lower low, lower high. Look at that beautiful trade over there. Okay. And that was there was a Fed meeting over here somewhere. So that move over there, we can see that technical setup on that day. Fed made an announcement, things happened, fundamentals and technicals came together, and suddenly you're short. And you would have been short, you would have been short, you would have been short. But there may have been times when suddenly you were wondering, is this still long-term bearish? Right? Is this still long-term bearish? Am I still looking to sell this long-term? And in that situation, very, very helpful to observe QuantBox, not just in terms of QuantBox saying this is a sell or this is a buy, but observing any change in that fundamental data. Okay, so this, right now, the dollar pairs are cool and we've made lots of money on them since last year and it's been great. But the yen pairs is where I think the next big opportunity is coming from, personally, because of the fact that right now we're sitting in a range. And if you can have the patience to just wait for that range to turn into a trend in the form of a lower high. Sorry, this is Aussie USD. Let's go back to the yen pair. In the form of a lower high, lower low, lower high. And of course, you verify your lower lows. Has price close to supports? Is it a lower high? Is price close to resistance? Verify your lower low and lower high. Once that's happened, then look at your data. Is anything happening that we need to be aware of? Okay. You can see some news today. So what's the central bank rhetoric? The Bank of Japan. What's the central bank rhetoric in America? What's the central bank rhetoric in the Reserve Bank of Australia? Right? So these are things you're paying attention to, linking it up with pivot points. But ultimately, what's nice is in this situation, you look at this and say, I'm unclear on a technical bias. What are my fundamentals telling me? Okay, we're neutral right now. That's very, very helpful. Because what that means is if you don't have this tool and you haven't got this to fall back on, this can end up being something where you start to create stories inside your head. You start going like, okay, it is neutral, but I think this could happen and that could happen. And then what about this? And so suddenly we get sucked into perception. And the moment we start trading perception, We're no longer trading reality. We're now trading our emotions. We're trading past experiences. We're trading past trauma. Our brain starts telling us, oh, the last time you did this, you lost, so don't do it. Or the last time you did this, you won, so you must do it. Or, we move our stops too soon, or we sabotage our trades. We let our losers run and we close our winners short. Like all that stuff comes from perceptive trading. We're trading our perceptions, right? The beautiful thing now is that looking at this, to put the right template on, looking at this from a data perspective, no indication of trend, completely neutral in the fundamentals. I'm watching this very, very carefully and very, very closely, right? Looking at this daily time frame, looking at the prediction of where price is headed, and then looking to see if you can confirm that. Okay. Same thing with CAD yen. Looking at the chart in CAD yen and saying, okay, what have I got? Also, sideways, right? How do I know it's sideways? Well, look at how we came up here, we broke all these support levels, and instead of making a lower low, we closed over here, right? So stuck inside a range, neutral. Okay. You then take a look at your QuantBox, you're like, oh, neutral. But again, we're looking for a change. We're looking for this to change into a trend. We're looking for this to give us the opportunity to take this down. Why do I say down? Again, look at how high we are. Why on earth would I want to buy? Why would I want to buy Japanese yen pairs? Why would I want to sell Japanese yen? Right? That makes no sense whatsoever. Could we stay up here until the end of the year? Could this be the same as what we observed on the Aussie dollar USD, the Kiwi dollar USD, and the USD CAD, where price stays above that? So in the case of dollar CAD, just to take a look at that chart, where price stays above that profit-taking zone for a number of days, waiting for the end of the month. At the end of the month, just drop it like it's hot. And then observing whether we are currently long-term bearish when you sell, and if you aren't, taking profit at the central pivot point, and if you are, letting it run all the way down to the M1. And by the way, you can see the situation here. When we came off here, we weren't long-term bearish yet. There's no lower lows or lower highs. There's no reversal patterns. Okay. Is that the similar thing we're going to suddenly find with our yen pairs? Are we going to stay up here until the end of December? Ultimately, it doesn't really matter when we come down, because all we're looking for is an indication that we're no longer ranging, i.e. we've got a lower low, lower high, and we can match that up with an indication of sell, bearish, CAD, yen, fundamental bias. Okay. You can see lots of news coming up tomorrow. Very, very powerful stuff. And I think that's where the money is made, right? You want to buy something that's undervalued, you want to sell something that's overvalued, and you want to trade something that's no longer neutral. Okay. Those changes are significant. So when you're buying something that's undervalued, you've got something that's been bearish for a very long time, confirmation of that reversal, confirmation of the fundamental change to bias, and you're then buying something that's low, undervalued, right? Think about anything else. If you were going to buy a house, would you buy the most expensive house in the worst neighborhood? Or would you buy the cheapest house in the best neighborhood? If your answer isn't the latter, then you don't understand anything about real estate. Okay. If the forecast was that housing prices are going to rise over the next 12 months, and you suddenly find yourself in month one of that 12-month period, would you sell the house in month one? Or would you wait until month 8, 9, 10, 11, or 12? And then sell it for a much higher value and get a much bigger profit? Of course, you would wait, right? So you want to buy undervalued and sell overvalued, or trade the change of neutrality to bullishness or bearishness. Now, looking at this tool doesn't necessarily mean like, okay, it's neutral, I'll just relax and not pay attention to it. You're looking at this every single day, every single week, paying attention to the fundamental data, and you're looking to see, has anything changed? Has anything changed technically? Has anything changed fundamentally? And if you do that and you pay attention to that, and you really focus on getting that right, what you'll end up doing is, instead of losing money and being an inconsistent trader who's basically break even at best, you'll get into trades where you waited patiently for the change to take place, both fundamentally and technically. You'll get in over there, and suddenly you'll be the trader who did this. Okay, that's who you'll be. You'll get in there, and you're riding all the way down there. Okay, and so in all these pullbacks and moments when, you know, everybody suddenly starts saying, oh, this is now bullish, or this is now bullish, or all the retail traders, let's buy, let's buy, let's buy. And you're sitting back and saying, nope, technically, I don't have any higher high, higher low. There's been no break of resistance where resistance became support. You can go study all of these. You can see there, look how that's lower than all of those. That's lower than that. Like, where's the, they might look at this and say, oh, that's a higher low, that's a higher low, that's a higher low. But if you go measure these out, you'll see that none of them close at bullish integrity. What is bullish integrity? Basically, the level that price has to break. It's the level of, it's in a bearish trend, it's the resistance that price has to break that must become support for that trend to no longer be bearish. Boom. Now, this began in a range. Sorry. This began in a range, right? There's the beginning of that range. And that range for 6 months. And then suddenly, pa-ching. Okay, look at your yen pairs, right? So right now on the yen pairs, I'm looking at this and saying, okay, I don't have, my fundamentals are neutral. So then how would I know that I'm waiting for this to be bearish? Position. Again, are we high or are we low? Now I understand that price can be high and we can continue going up and continue going up and continue going up. But again, look at those yearly pivots. Look at where price is. Okay, if you understand anything about pivot points, you'll know that right now, that's a terrible place to be selling. Sorry, to be buying. That's like selling down here, right? If you bought down here when price was at the profit-taking zone, guess what? You're the trader who's in this. Okay, beautiful trade. Back in 2020. So that means you've got a beautiful bullish yen portfolio, a beautiful bearish dollar portfolio, and you're smiling and laughing all the way to the bank. And you're about ready to do it again. Okay. You're sitting and you're waiting and you're looking at this and saying, okay, cool. So from a positional perspective, I definitely am not long-term long. I mean, you could be using whatever you're using to trade the range and, you know, scalp it up and scalp it down. Personally, I'm going to sit back and wait for an opportunity to really get into some solid trades, preserve my capital, keep that powder dry. And when I get an opportunity to take this down, I'm going to be ready for it. I'm going to take it. I'm going to make sure that I've confirmed everything fundamentally and technically. And if you can build control around that, and you can build consistency around that, you're going to be a very confident trader. Of course, the fundamentals is now made really easy for you. Okay. So that you can focus all your effort and energy on becoming a really good technical trader. So that you understand how to verify role reversals, how to verify lower highs, how to verify higher lows, how to use moving averages correctly, how to use pivot points correctly, how to understand the way in which multiple timeframes work with each other so that you can verify trades from the daily to the H4 to the H1. And if you use the M15 and M5 down to those timeframes as well, even the M1, if you use that, whatever your process is, right? And so fundamentals are taken care of thanks to the QuantBox tool. And so you can become a master at technicals. And I told you this yesterday. I said that Like for me, this is just heaven in a handbasket, because for the last 4 years, I realized in order for me to study fundamentals, there was only one way to do it. There was, in my opinion, there was only one way to do it. And that's the path that Wayne showed. And he showed a very clear path. He went and he worked his butt off at Harvard, right? And just studied and studied and studied and became an absolute G, but also had a previous track record with regards to fundamentals, understanding fundamentals, and really getting into that stuff. Being a CTA and whatever he went through with that, and like he had a really good track record when it came to fundamentals. One of the best fundamental analysts I know. The fact is, Wayne doesn't need any of this database, any of this dashboard stuff. He can work the stuff out himself, right? Which is powerful. I couldn't follow that path. It wasn't a path I wanted to follow. So I chose to get really good at technicals. I'm glad I did, because now that I've got a tool like this, I'm very relieved. I always felt like there was something missing from my trading. And, the work that I'd have to go to, again, this seasonality chart, do you have any idea how valuable the seasonality chart is? Go and look up seasonality online. Go and Google seasonal charts for the currency. And it's across. This seasonal chart's available on every single pair you could possibly want to trade. Okay, go and find that out there in the wild. Go see if you can find a seasonal chart that's in line with not just a seasonal price chart, but it's in line. It's in line. It's created for traders. Okay, that sits next to a whole bunch of fundamental data, sentiment data, and a score summary. Right? I'm so grateful for this tool, because it means that now the decision I made to study technicals the last 4 years was a good one, because that is where you confirm the trade. In terms of my objective as a trader, my goal as a trader, I always saw myself as being the solid technical trader in a team with a quant. Had to make that distinction, had to make that decision. I never ever wanted to be a hybrid. I always wanted to be, because I believe focus means sacrifice, be really, really good at something, and then work with someone else who's really good at that task. However, quants are expensive. Working out this data takes time. Let's not even get into what you have to study to understand, to put these calculations together, okay? And there's so much more stuff coming in the future versions of QuantBox. Like, we've got some amazing stuff that we're going to be providing to our members. So you are now in a position where, if you've spent significant time studying your technicals, and whatever you use, it doesn't have to be what I use. It doesn't have to be what Wayne uses. It can be Gartley. It can be Elliott Wave. It can be, the Pitchfork. It could be absolutely whatever you use, trend lines, whatever. It doesn't matter. As long as you have technical controls that you use to create consistency, which gives you confidence in your trading with a solid fundamental bias. Unstoppable. So to summarize, very nice to see that the neutrality of the yen pairs are matched by the neutrality of the fundamentals. And also very nice to see that if I'm in a situation where I'm observing pound dollar, for example, and I can see it's been going up for several days, that I can look at a tool and I can say, has anything changed? And I can have the confidence in saying, no, nothing has changed. Okay, so that means this is just profit taking. It's not bulls buying at this moment in time. And things can change. Of course they can. But at this moment in time, that's what that is. Okay. And so the only time I can sell it is when price is at resistance and I get some confirmation of bearishness lower time frame. And if I suddenly get an indication of bullishness, where I'm like, okay, that trend is over, like price makes a higher low, or price breaks resistance and resistance becomes support, or something breaks the bearishness. Remember, there are no higher lows in a bearish trend. So there's, certain things have to happen for this to no longer be bearish. And if that happens, I can say to myself, okay, that's interesting. Has anything changed? Now, a good example of this is go back to 2016 on pound dollar. Go and look at how price behaved heading into January 2016 after the massive amount of bearishness that took place on pound dollar when the referendum was announced. And up until June, when the referendum took place, the fact that pound dollar, despite it looking like it was going up and down and sideways, never ever became technically bullish, which would have given you a good indication of the fact that on the date of the referendum, price was going to go down. Of course, price was also coming off of profit-taking areas, and it was coming off of role reversal in the daily time frame. There's plenty of information to indicate that this was going to go down. But looking at a fundamental tool in that situation and being able to then confirm if anything had changed fundamentally, a bit of a difficult one to read because it was based on an event, but still, the ability to look at the fundamental data and say, has anything changed that's going to cause pound dollar to go up? And if there's no change, even if right now, we get something in the market where price does make a higher low and price starts going up, but you look at the fundamentals, you said, technically, we're going up, but fundamentally, we're still bearish, which tells you that you can wait and prepare for price to become bearish again. You can look for levels of resistance. Also, what's very important is that if you are in trades where you sold previously and you're still in down here, are you taking profits? Are you doing some hedging? What's your plan right now in terms of trade management? If everything says bearish fundamentally, but yet price is going up, why would you want to close your trades? Your bearish portfolio is still relevant. That's the power of fundamentals. But again, it's a lot more difficult when you have to work this stuff out, because then you're dealing with a steep learning curve, and you're worried about the validity of your data and the integrity of your data, and you're trying to figure out how to read it. Whereas right here, boom, nicely explained for you. It's like having a quantitative analyst in a box. I'm super impressed by this tool. I really, really am. I think it's a game changer. I really think it's a game changer, and I think that I think it feels like I'm now using cheat codes, and I'm very happy that I can finally feel confident that I can have a conversation with Wayne about the fundamental analysis of a currency or a currency pair, two currencies. And I can back the data, I can back my knowledge, back my opinion with data, right? Very, very cool stuff. Okay, so use your QuantBox tool, check to see if anything has changed. You're looking to manage that change, and until change has taken place, you continue going in that direction, as long as you can confirm everything technically. What more could you ask for? So let's see as things develop. We're going to be keeping a very close eye on these yen pairs, because I really am looking forward to taking these down at some point in time, whenever that is. I've been waiting to buy Japanese yen since last January. So I'm looking very forward to taking these down. So we're going to wait for technical confirmation. We're going to wait for fundamental confirmation. We're going to continue paying attention to the dollar pairs, pay attention to the bias, the fundamental bias, recognize that nothing has changed. And so we're waiting for price to get up to a resistance where price then becomes bearish at the resistance, and then continue in the direction of the original trend until such time as we've got technical reason to believe that right now is not a good time to be selling long term. And that can happen. Again, go look at pound dollar 2016 and see how price behaved heading up into that referendum. I wish you a good day. If you're looking to jump into QuantBox, quantbox.co. Okay, that's where you want to go. All right. I thank you very much for your time, and I hope you have an amazing day further. All the best to you, my friends.